The day of reckoning for tech unicorns might finally be here. Some Wall Street analysts are predicting a new wave of mergers in the software space. Bank of America top investment banker Rick Sherlund is now predicting this wave of software mergers. Sherlund sees a parade of struggling companies selling themselves to bigger players at cheaper prices because of poor macroeconomic conditions. What does it mean for the tech companies? What does it mean for the economy? And what does it mean for the future of the United States? But before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. You do need to see greater capitulation, the Bank of America Vice Chair of Technology Investment Banking told CNBC's Fast Money yesterday. Companies will have their valuation expectations soften, Sherlund continued. And that will combine with more fully functional financial markets, Sherlund also continued. I think it will accelerate the pace of mergers and acquisitions, Sherlund emphasized. Sherlund's prediction comes just after of Adobe's $20 billion deal this week to design platform Figma. Adobe did not excite Wall Street analysts with the purchase. In fact, quite the opposite is true. Adobe shares tanked 17% because Wall Street analysts thought that Adobe grossly overpaid for Figma. Sherlund, a former software analyst, was named to the investment banking all-star list for 17 years in a row. Sherlund worked at Goldman Sachs in the 2000 tech bubble. He thinks that Wall Street is in the early stages of a tough market cycle. You need to get through third-quarter earnings reports to feel confident that maybe the bad news is largely out into the market because companies will be reporting lengthening of sales cycles, Sherlund said. We need to reset expectations for 2023, said Sherlund. Sherlund and his team are superstars in the M&A market. You have private equity with a boatload of cash, and they need functioning debt markets for leverage to do deals, Sherlund noted. They are very eager and actively looking at this sector, Sherlund emphasized. All of this it suggests that in absence of an IPO market, we're just going to see a lot more consolidation coming in the sector, Sherlund emphasized. Sherlund made a point that IPO demand is weakened because of rising interest rate factors and inflation. The IPO market is basically closed, but when the window does open back up, you are going to see a lot of companies going public, Sherlund added. The long-term prospects for software are extremely attractive, Sherlund added. You've got to be very bullish on the long-term fundamentals of the sector, Sherlund said. Every company is becoming a digital enterprise, Sherlund continued. We have entered a phase that practically everyone characterizes as weak macroeconomic period. The Federal Reserve has aggressively raised interest rates in 2022. These factors have the United States teetering on the brink of a recession. That has led to a dramatic reduction in consumer discretionary spending. And corporate ad spending has fallen off a cliff. And layoffs are sweeping the United States. Here is the list of companies that have announced layoffs in August 2022 alone. Snap, owner of Snapchat, announced a 20% reduction of employees. This amounts to approximately 1,300 workers. Snap also initiated a major restructuring of their online platform. Apple announced that it is cutting 100 positions and slowing hiring and spending. Oracle, the worldwide software giant, has cut hundreds of positions but declined to say how many. Most job cuts are said to be in the customer service unit for U.S. customers. Crypto trader Coinbase announced a 20% workforce reduction. Crypto lender Genesis cut 20% of its workforce due to what they call turbulence in the cryptocurrency market. Online stock brokerage Robinhood cut 23% of its employees. This is the second round of layoffs for Robinhood so far in 2022. Twilio announced a layoff of 11% of its employees just days ago. Twilio has yet to reach profitability and is targeting its first profitable quarter in 2023. Twilio will take $90 million in charges related to the restructuring plan in the third quarter. The layoff will affect up to 900 Twilio employees. Twilio stock has cratered 73% this year. Patreon is just the latest in a growing list of U.S. tech companies announcing layoffs as the U.S. teeters on the brink of recession. Patreon is laying off 80 people. That amounts to about 17% of its employees. Patreon has announced the closing of offices in Dublin and Berlin. Connected exercise pioneer Peloton has cut 800 employees, announced several store closures, and raised prices. Even companies that are not considered to be in the technology space are announcing job cuts. Walmart is cutting 200 corporate employees. The job cuts are focused on merchandising and real estate. Car giant Ford announced that it is cutting 3,000 salaried and contract workers. The job cuts are in India, Canada, and the United States. Wayfair, the Boston-based home goods company, Wayfair is cutting 870 employees worldwide. HBO and HBO Max cut 14% of its employees, which is about 70 people. Bed Bath & Beyond, the latest meme stock, is cutting 20% of its corporate positions as part of what management calls a major restructuring. It is also closing 150 stores. Gannett, the largest news publisher in the United States, announced the elimination of dozens of positions. Electronics retail giant Best Buy has cut hundreds of jobs in its stores across the U.S. due to what they call a challenging macroeconomic environment. Online prescription glasses retailer Warby Parker is cutting 63 corporate positions. This is about 2% of its worldwide employee base and 15% of its corporate jobs. Google, which has not yet formally announced layoffs, said that there would be an overall review of sales performance and performance in general. According to the report, the warning states that if third-quarter results don't look better, then there will be blood in the streets. Last month, CEO Sundar Pichai acknowledged, during a shareholders' meeting, that Google's performance has been far from good. Despite the number of employees, Google seems to be underperforming as a company. Recently, Pichai shared his plans about a hiring and investment slowdown through 2023. Pichai is publicly asking employees to work with greater urgency and more hunger. Last month, Meta Platform CEO Mark Zuckerberg told employees that the company plans to reduce its hiring target for engineers from 10,000 to between 6,000 to 7,000 amid the market downturn. Realistically, there are probably a bunch of people at the company who shouldn't be here, Zuckerberg said. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.